Well, hello everybody. Welcome to P.B.M. Money. Today, I want to go take a couple of steps back and talk about just the pros and cons of stocks as an investment. Now, whenever you watch personal finance videos or you hear of advice given, it's usually in the realm of something in the stock market. And a lot of you probably understand what that means. But there are some people that don't, some people that know a little bit, and it is my belief that Robinhood and some of the other free platforms are going to come in for a lot of scrutiny in the upcoming months because they've made it so easy to invest in the stock market, which is a good thing. But they're going to try to say that it's costing people money because it's too much like a game. And the phrase I keep hearing is gamification. And I said this in another video and I'll say it again. They're right. They have turned it into a game. But you know what? It's always been a game. It used to be a game for the rich and the wealthy and the hedge fund people. All Robinhood and the other free platforms did is include all of us in the game. That's the gamification, and that's why they want the stock market to be complicated so they can go back to having the game to themselves. So today, I want to take some time and just kind of go over the pros and cons of being in the stock market. Now, first I want to cover the pros, because there are a lot of them. One of them is it's easy to get in. I mean, I know nothing about technology, but I had my account set up in 5 minutes on Robinhood. The hard part for me was hooking that up to my bank account because I know nothing about electronic banking. That was the tough part, and that took me about a day to figure that out. But anyway, it's very easy to get started, especially if you know anything about technology. It can be inexpensive to get in. Since there's no fees, no minimums, no accounts, no brokerage fees that have to be paid, you can get in for as little as $100. I think most of the like Robinhood and Webull and all them, I think they require $100 to get in. Also, you can dollar cost average. Now that's a fancy term that means you put the same amount in each week, month, year, whatever it is. And the term means that you don't worry about the price, you put it in at the same time every month, and over time the costs of your stocks will average out because some months you'll buy high and other months you'll buy low. And if you stay in the market and you dollar cost average, you will eventually get to the point where it is a good investment. Within certain stocks, they offer what's called dividends. A way to look at dividends is it's kind of like the company is paying you interest to keep your money in their business, much like a bank. The difference is a bank today will pay you less than 0.5% per year on your money. The stock market dividends on good companies will pay you somewhere between 2 and 5%. So even if the stock price doesn't appreciate and make you money, keeping it in the market for the dividends is 10 times more valuable than keeping it in a bank. Another potential pro for owning stocks is the potential for growth. If you get a mid or small company and you catch them at the right time, the growth can be exponentially wow. I mean, Tesla, Apple, Facebook, I mean, think if you've gotten in on any of those stocks when they first were issued. The growth would be phenomenal. Now, the next one is both a pro and a con, and I'm going to list it here as a pro for this reason: leverage. Leverage, you can use a small amount of money to control a large amount of stock. However, it is very, very dangerous. But you can do it, and you can reap the benefits of controlling a lot of those stocks for a little bit of the money. That is an advantage if you know what you're doing and you're willing to take the risk. On some of these stock platforms like Robinhood, you can buy fractional shares. As an example, Pepsi, let's say, and I don't know what it is today, but it was running about $270 per share. So if you wanted to buy a share of Pepsi, it's going to cost you $270, but what if you've only got $100? You can buy $100 of Pepsi. It's less than a share, but the percentage of dividend and the percentage of growth is still the same. Not the amount, but the percentage. So fractional shares can be very, very lucrative and a big plus. The last pro I want to talk about is liquidity. It's very liquid these days. It used to be, before the Robinhoods and Weebles of the world, it used to be kind of a non-liquid asset, because you'd have to contact your broker, they'd have to draw up the order, it would have to be sold, then it would have to be, fees would be taken out and mailed, and I mean, it was a process. Today, if you want to liquidize, is that a word? Liquidize your stock, all you do is go onto the platform, hit a sell button, it'll be sold that day, transferred to your account in a day, and you'll have access to your money in a couple of days. So it's pretty liquid. Now let's talk about some of the cons of owning stocks as an investment. Oh, there was one more pro I wanted to talk about, and that is, for the history of the stock market, in any given period of time, within, say, a 10 to 15 year, any 10 to 15 year period, there is an average of a 7% growth rate per year. So 7% growth per year plus 2 to 3% dividend per year, you're going to make 10, 11% in the long term. Not in the short term, but in the long term. Very good odds. Now, what are some of the cons? One of them is the price fluctuation, and I can tell you this as Dogecoin, or as I like to call it, Douchecoin. I bought that sucker at 60 cents a share, watched it go up to 74, and then in a couple of days went all the way back down to 33 cents. Oh, brother, I lost money on that deal. But my point is, the price of the stock changes second by second. It's the fluctuation. Another con is you're relying on the companies to perform. It's not like you can control anything that the company does. You have to rely on the past to predict the future, which they say you're not supposed to do that, but how else are you supposed to gather information on anything? And here's where the con comes in for the word leverage. You can leverage, and it has its benefits, but it also has its downsides. And one of the major downsides is, if you don't know what you're doing, you could lose a bunch. Not just what you put in, but they could have calls on your margin, is what it's called. And they can take a ton of money. Tied to the one before, where you're relying on the business to perform to make you money, what if the business goes bankrupt? See, if your money's in a bank, you're not going to earn as much, but if the bank goes bankrupt, it's covered by the FDIC. up to $250,000. Not so much in an individual business. Another thing that you're relying on in the stock market is the U.S. and the world economy. Again, things you can't control, but plays an integral part in the price and the quality of your stock. If you buy the stock when the economy is good, and then all of a sudden we have a pandemic and everything goes straight down, you just lost a ton of money. Same with the world economy. We buy so many things from China. If China goes bankrupt or changes their coin or has a major financial issue, it's going to ripple to the United States and the stock market. Now, my conclusion about stocks as an investment. I believe stocks are a great long-term investment. That doesn't mean that I'm advocating buy and hold for everything. I'm not. I'm saying in the long term, being in the stock market is the right place to be. I'm also saying that the stock market is not a place to be in the short term, because the short term, it's way too volatile. Too much volatility, too many things can happen, and very quickly. Too quickly for you to respond. So, overall, for stocks as an investment, great for long term, lousy for short term. And that's the pros and cons, in my opinion, of owning stocks as an investment. Well, that's all I wanted to say. You guys have a great day, a great week, and happy investing.